Welcome, Ryan Narus, to Wealth Matters podcast. How are you, buddy?
I am excited to be here. I'm a fan of your podcast, and I am honored and quite humbled to be here because you've had some studs on here, and I don't feel worthy to a certain degree, but I think we're going to have an awesome show, and I'm pumped to share some value with your listeners.
I appreciate that, Ryan. And I could hear the excitement from your voice. So I'm looking forward to this episode.
Yeah.
So, can you tell us about what you do, Ryan?
Yes, so I'm a mobile home park owner and operator. So instead of buying real estate and hiring a third-party management company, I am my own third-party management. I have my own property management company, and
Oh, okay.
the reason why I did that not only is to achieve an economy of scale and to be more competitive on my underwriting because I have less money allocated to property management, but also because I realized pretty early on, number one, I didn't have a choice because I started with nothing, no money, no experience, no network,
Interesting.
literally no other option. I had to pay myself the salary, the on-site salary, and be the on-site property manager for my properties just to get started. But also a big reason why I do that too is because if you are on the front lines, you will learn things that you just will not learn if you're not there.
No,
And because I have been on the front lines, my underwriting has just exploded in terms of ability. And I am now able to see some deals that others don't see because they don't understand what I understand. And like I like to say, Excel is garbage in, garbage out. You
yes.
can spend a week making a pro forma, but all that you achieve by spending more time on a pro forma in Excel is you believe it more.
Right,
And
right.
like that one guy says, which I love this quote. He says, more fiction has been written in Microsoft Excel than Microsoft Word.
Wow.
And it's true. It's so true. So
It is so true.
any any new newbies that haven't yet invested in your own deals yet listening in, my number one advice for people breaking into this industry is find a way to get on the front lines, because if you fundamentally understand your asset class from the front lines, your assumptions will be better, your pro formas will be better, and sometimes there will be a screaming hot deal right in front of your face that you will miss
Right.
because you haven't been in the nitty gritty.
And you are preaching to the choir here, but I've been telling everyone to. There are so many people sitting on the sidelines waiting for the next correction or waiting for to have enough money to invest in the real estate. And I'm like, if you don't pull the trigger, you are not going to learn. You can read as much bigger pockets, you can meet as many people, and as you said, analyze the heck out of every deal you receive. But unless you do it, you are not going to learn. Right.
My first mobile home park deal ever was a total slam dunk from a lending standpoint. It was like a 2 debt coverage ratio or something just off the charts.
Oh,
It was
nice.
a very, very good deal. And because I had never bought a mobile home park before, and because I was starting with nothing, I had no money other than my investors, right? So
Right.
I had no experience, no network, no money. First deal, screaming hot deal. I went to 40 banks, 40.
Wow.
And I am proud to report I got 40 rejections.
Of
No
course.
one wanted to touch it. So we had to lean on our investors to pull a favor to
Wow.
get our first deal bought. But our second deal, we
Of
only
course.
reached out
Now.
to about 15 lenders and two said yes. So if you're listening in, I totally agree with Alpesh. You have to get started, even if it's not a home run, even if it's just a single or a walk, or even if you take a little bit of a loss,
Right.
you will have experience and be able to speak with confidence, and you will have clout that you just want. So in other words, the difference between 0 and 1 is absolutely monumental. And also, by the way, in good times like right now, investor equity cash is much easier to find and debt is much easier to find. So if you're waiting for a
Right.
recession, the deals might be a little bit better, but you might not be you might struggle to find cash, both debt and equity. So
Both
there's no
sides.
Get started. If this is what you want to do, don't make excuses. Get started.
Such a great point, Ryan. I have never mentioned that point, but you are so right. If the times are bad, then it will be hard for you to find
Yeah.
investors as well as debt, lender, all kind of issues, right? Unless you have
Yep.
you have experience behind you, and the only way you can get experience is get started right now,
Exactly.
right?
Isn't it that the old Chinese proverb, the best time to start was 20 years ago. The
Of
second
course.
best time to start is right now.
Right now. So we haven't even started, and this guy started dropping words of wisdom all over. So I want to ask him because he mentioned no money, and he started. How did you get started in real estate, and how did you do it without no money, no experience?
Yeah, so I basically so first and foremost, it took years. So it took years to, number one, figure out what I wanted to do. I looked at over 100 businesses, picked a couple, failed at a couple, on a smaller scale, failed on a couple, and then eventually found mobile home parks. So it's not really fair to say 4 and change years ago, I I started a journey, because I had already started the journey. I just didn't know where I was going.
Hmm.
So I find mobile home parks, and I realized I don't have it. I had more student loan debt than I had cash to invest in deals
Yeah.
by a wide margin. It wasn't close. So I mean, I was effectively negative in that regard. So the question is, how do you do it? And I guess I kind of realized this intuitively, and it wasn't until someone called it out that I realized something very important about real estate, and this that it's a it's like a three-legged stool. And if you remove one of the legs, the whole thing falls apart. Real estate. Number one is a willing seller. You have to have someone who will go, yes, I will sign at the line at this price. Otherwise, you have nothing. You have to have money, either debt, equity, or some combination of the two. Otherwise, that seller is going to be like, I'm not just giving you this piece of real estate, I'm doing this in exchange for money. So then it obviously falls apart if you don't have money. And then number three is operations, right? So in other words, unless you're doing a triple net lease, and even to a certain degree, there's sometimes things that you have to do in a triple net lease to a very small degree. You're almost never devoid of work unless you're a limited partner investing in a fund, or somehow you have something worked out where you're passive. You are always you are always going to need someone on boots on the ground, whether that's you or someone else. You will need someone on the ground in basically every type of real estate that you're considering. So what I realized is, if I don't have any money, I can find the deal and I can do the operations. So in other words, I can find a way to monetize it.
Right.
So basically what I did was I went, number one, first and foremost, everyone complains about not being able to find deals. I'm going to find deals and I'm going to figure it out, because I bet there's a way that people haven't tried yet, or people are unwilling to do. So first and foremost, I did everything I could to find deals, and then almost a year into it, I found my first deal. So it took a while to find my first deal. So step one, I found a deal. So right then, because it's hard, and it's not going to the store and picking up milk, right?
Right.
You are deserving of compensation for that.
Yep.
So my first deal, I basically demanded a asset management, or not an asset management fee, sorry. I demanded an acquisition fee. So first and foremost, if you find the deal, you can monetize that. And second off, so my first deal, I partnered with an experienced operator with a team, so there wasn't any room for me to be in the operations in terms of money. But my second deal, I commanded an asset management fee as well as an acquisition fee. And then I put a little bit of my own money in it, because I cashed out some of the finder's fee from the first deal, and I left in a nice little chunk in that
Nice.
deal as well. So in other words, I found a way to monetize the three legs of the deal. So that way, by my third deal, I could quit my job. I took a massive haircut on my salary. And true story, so I'm very open about this. I pay myself $35,000 a year, and that's it. And every penny I make above and beyond that, at first I was taking losses, and now I'm making more than that. My balance sheet is making more than that. But I'm deliberately keeping myself at 35,000, because every penny that I make above and beyond that, I want invested in deals. And my wife absolutely and utterly hates it, as do
Right.
I sometimes, right? But here's the thing: what I've realized in my life is that as long as I'm making enough money, I don't need a nice car. I don't need to go
No.
and go to Europe and spend 10 grand on a trip to Europe or the beach. I am very happy helping people, and I'm very happy growing my business. And now that I know what I truly love and enjoy, I can basically ignore and pretend like I'm not making above and beyond what my bare minimum is to survive. And so that way I can take that extra money and reinvest it in my company.
That's a great idea. That's and a great point. You don't have to keep up with the Joneses, right?
Exactly.
Hey,
Exactly.
so I have a question. I've been looking into mobile home parks personally as well, but I come from, single family, multifamily. So why mobile home parks?
So for me, it fits my skill set like a glove. And let me expand upon that. First and foremost, I graduated undergrad from Wake Forest University in 2009, which was the worst time to
Oh
graduate.
yeah, yeah.
It was atrocious. So I was a psychology major, statistics minor, and I wanted to be in sales. And as you can imagine, nobody
No,
was hiring for sales unless you were going to be effective day one and you had a
right.
Rolodex and 5 years of experience. And I was just like, I can't do that. But at the same time, I can't not get experience. So my old karate instructor was a car salesman, and he was like, "Why don't you come sell cars?" And I was like, "I'm not below doing anything, and I bet I would gain a great education." And I was right. I did pretty well with it. I ended up selling almost 900 cars in 4 years, won a bunch of awards, wrote a book about it,
Oh
and
really? Oh,
it taught me some incredible things. It taught me how to negotiate. It taught me how to market. It taught me how to persuade people. It taught me how to take a really how to be confrontational, yet diffuse the situation and have people leave warm and fuzzy with the warm and fuzzy feeling. So in other words, there were some really, and I loved it. I'm not a car person at all, but I love sales. And so for a while, I loved it until I hated it, if that makes sense. Because I didn't
of
really
course.
truly believe in what I was doing. Because I mean, you know this with Wealth Matters, you don't want to invest in something that depreciates.
Right,
So I didn't fundamentally believe, even though I sold Hondas, which hold their value and are wonderful
right.
vehicles, and I will probably only drive Hondas for the rest of my life.
Yeah, that's what
Um,
I have. Both Hondas, by the way.
I love Hondas. I have a
Yeah.
10-year-old Honda Fit, and I'm gonna get a straight drive, love driving stick. We'll keep it forever. And the thing of it is, even though I believed in the product, I didn't believe in cars because
Right.
I fundamentally understood wealth building. And I saw too many people just make silly financial decisions with their car. So I didn't believe it. So eventually it wore on me. So
Well,
anyway, I had those skills. So I know how to sell, I know how to market, I know how to deal with confrontation, I know how to collect, right? And so, because mobile home parks, like as in all real estate, cash flowing real estate, is a collections business, whether you want to
yes.
admit it or not.
Yep.
So, in other words, I had those skills, but also when I was at a young age, I realized from a charity standpoint. So I had a learning disability growing up. I had a attention deficit hyperactive disorder, ADHD, and I had parents that were so patient with me
Oh,
and had the money to get me treatment, right?
right.
So, in other words, I was always a decently smart kid, but if I didn't have my parents, I don't know where I would have wound up. And I hate to say it, but it's very possible that I could have wound up in taken intelligence and wound up in crime
Right.
or just wasted away potential. Not that I'm really that smart, but still, you don't want to have even a little
Right.
bit of intelligence go to waste, right? So I realized at a young age when I did some volunteer work for the Echo Club, which was a club here in Charlotte, where I'm an Irish Catholic, went to Charlotte Catholic High School. Echo Club, I participated with them, and I tutored underprivileged kids. And I remember this one girl where a light bulb went off in my head. She asked me some really basic questions about algebra. And I answered her questions, and she had a light bulb go off in her head. And she went, "Oh my gosh, wait, this, in so many words, this follows logic, and I don't just write numbers on the page." And I kind of laughed a little bit. And I was like, "Yeah, of course. Of course it follows. It all follows logic." And she's like, well, wait, do you mean English and science class also follow logic? And I was like, yes. She was like, can you help me with my English homework next? And I'm like, yes. And I realized a really sad truth in that moment, which is that this was not a dumb girl. She had aptitude. She just did not have parents that either could care or wanted to care, or some combination of the two, because she was underprivileged. And so it was that moment when I was about 16 years old that I realized I wanted to do, I had an advantage that in my parents and what I was born into, which was totally unfair and out of my control, what family I was born into.
Right.
And I wanted to help people, that kids that did not have that advantage. So in other words,
Nice.
my skills fit it, and also my overarching life goal of charity fits it too, because I started a partial scholarship for kids in my communities. I offer to pay college application fees. I help parents build credit if they opt to
That's
pay online.
awesome.
We partner with PayLease. We do stuff like free food giveaways, and I'm actively looking for more charitable causes to get involved in, because what I find is helping charity makes me so much happier. So that's a really long answer to why mobile home parks, but when you, for the listeners, like, you really, like, whatever you pick, you're going to put your all into it. So make sure it
Right.
covers all the bases.
So, have you ever invested in multifamily and single family, or are you able to compare mobile home parks to multifamily or single family residences as
Yes,
investment?
it is, yeah, for a lot of ways. So mobile home parks, I'll tell you first, we'll go just briefly over pros and cons. The pros are that it's affordable housing, which Deutsche Bank came out with a report, I think it was Q1 2019, where they basically said 38% of the United States of America that needs affordable housing can find it. So you're talking about almost 2/3 of this country that requires affordable housing can actually
Right.
find it. In other words, your demand is out of control. So from that standpoint, the demand is there. Also, I think there were like less than 5 mobile home parks in the country developed last year. So, and we lose about 1% of the mobile home parks every year. So it's actually a dwindling supply. So it's not growing. So supply is there. And at the moment, it costs more to develop than it does to buy. So that's why they haven't reached that threshold. Otherwise, it'll explode. So, in other words, the demand is out of control, which is great. But also, if you do not own the homes, it costs like, they're called mobile homes, which you can move them, but it is so expensive. You have, at a minimum, $2,000 to $3,000 to move it. You have to get permits. You
Right.
have to, in some cases, spend $2,000 redoing all the plumbing wherever you show up. You have to build decks, which will cost you a couple $100, if not $1,000. You have to do skirting wherever you show up, because the terrain is not going to be the same. So you can't just bring the skirting and the decks with you. So there's a lot that goes into moving the homes. And since there's a high demand, if you have someone who's about to default on their own, if you're skilled, you can actually help people sell out of their home to someone that you screened if they default on their home. So in other words, there's a lot of attractive things about it, but there's a lot of not attractive things about it. So first and foremost, debt is not overly easy to find. On the bigger, nicer properties, you will have people beating down your doors. On stuff sub-$1 million, it can get really, really tough to find, and you can almost guarantee you are getting recourse debt where you're posting your own net worth as collateral, which isn't exactly overly attractive. And also, because a mobile home inherently is a depreciating asset, banks don't like to look at that or their income when they do their underwriting for you. So in other words, your cap rates are distorted because they're only going to look at the lot rent. Banks typically only look at lot rent. And also, you don't get oftentimes you're not going to get a building with it as well. Whereas in at least single family homes, you have a home. Apartments, you have a building. So there are a lot of pros, there are a lot of cons. And another really big con about mobile home parks right now is that the word is out. It's in
Yes.
Forbes, it's in Time Magazine.
Everywhere.
John Oliver did an episode on it, and my friends in the industry, myself included, get phone calls and letters from all sorts of people all the
Yeah.
time. So
Yeah.
it's the cat's out of the bag, and NKF came out with a report in, I believe it was Q2 2019, that basically said the national average for mobile home parks now are trading at about a 6 cap. So actually not that much higher
Wow.
than apartments.
Wow. That's crazy.
Yeah.
So, what are some of the gotchas investors needs to keep in mind while investing in mobile home park? Let's say as an operator, or even not as an operator, but as a passive investor, if you can throw us some of the gotchas.
Absolutely. One of the biggest gotchas is the industry hype right now. So I do my best
Yes.
to combat it. I have my podcast, Mobile Home Parks in Real Life. I have stripped all of the sexy and I'm only vegetables. I'm not the guy on the corner selling ice cream. I'm the little guy in, in the market selling vegetables and maybe gets a couple customers a day. But here's the thing, if you're running a marathon, you're going to come see me, right? Because I
Yes.
have what you need. If you're just you know, looking for a smoothie to feel good for a short period of time, looking for some confirmation bias, that's not me. I'm helping you get started. And the big thing that I say on my podcast is, at least from an operation standpoint, it is not easy. This is not a triple net lease or anywhere close to that. You have to have some serious skills. You have to know how to market. You have to know how to collect. You have to know how to talk to people. Even in the same county, you might have to completely gut your marketing strategy. I've had to do it myself. So it's a lot of work. It is not a triple net lease. Sure, sometimes you can have some serious downtime in my industry, but at the same time, you need to be ready to go and know what you're doing at the drop of the hat. And also, when you're on a smaller scale, there's not really a lot of third party management companies out there that are either willing to take it on, or if they are, actually have the skills required to do it. So that's a big gotcha right there, is just thinking that you're going to go buy it, it's going to run itself. But from a passive investor standpoint, there are some serious gotchas out there. So for example, I feels like once a week there's another guy who raised 10 million bucks for his
Yes.
fund. It's just out of control how many people are raising millions of dollars. And the thing is, I talk to a lot of them and they don't really have a thesis that's that different. So when you're looking at funds and potential joint ventures, make sure you really vet who you're doing business with, because some folks honestly don't know what they're doing. I mean, I'm on the phone with a lot of folks and they ask me really basic questions. Like, and I don't have a fund, I'm not actively raising investor dollars. Um, and I get on the phone with these folks all the time. They ask me just basic questions. And I'm thinking, man, if I've been at it for 4 years and change, and I don't have a fund, and you just raised 10 million bucks, and you're asking me that. If
Right.
I had $1 million and I was looking to place it with a fund, I'd be really scared. So the big gotcha is, even if you want to invest passively in this industry, make sure you do your due diligence, understand
Right.
the asset class. And when you're on the phone with a fund or whomever, you make sure you have good questions to ask them and do not be afraid to grill them, because that's your hard earned money.
Yep. So, what kind of rookie mistakes have you seen beginner investors make while investing in mobile home parks?
I will throw myself under the bus here, and I will say infrastructure. So, a big part of the hype story of mobile home parks is that you can have city utilities and the mom and pop owner didn't build them back. So you go and get sub meters and you build the water. But the thing of it is, number one, it's not cheap to put in sub meters. Number two, a lot of times you'll really struggle collecting. And the worst is, like, the mistake that I made on my second acquisition is I didn't check the water bills. There
Ooh,
was a massive leak at this property, and it was costing me about $20,000 a year to the ground
wow.
because there's a water leak. And I'm sorry, if it's not direct billed, even if it's city water,
You got
you
to
are
pay. Yeah.
responsible.
Yeah. And I have
And
had that happen too with me and my single family. So I know what you're talking about. I had
yeah,
paid 9 grand for 3 months of water.
oh my goodness.
Yeah. It was crazy.
Yeah, so I would say that's the biggest rookie mistake. And then the other one is over optimism. So, for example, thinking it's easy to have a vacant pad and fill it with a home, or thinking you're going to buy all park owned homes, so the rentals where you own the home and rent it as well as the land, and that you'll just go in and sell the homes, or that you'll buy something in a tertiary market and just assume that there are people there who want to move into your mobile home park in droves. So I would say over optimism, other than the infrastructure piece, over optimism is, in other words, unconscious incompetence, like my karate instructor would say. You're bad and you don't know you're bad at it. And you're overly confident and optimistic is a big gotcha.
Oh, those are some great points. So, what is your criteria to invest in mobile home parks? What do you personally see?
So I have a unique strategy. I am only interested in major MSAs. So I'm only interested in Atlanta, Charlotte, and only in the Southeast: Atlanta, Charlotte, Charleston, Asheville, Durham,
Oh, okay.
Raleigh. I
Yeah.
only look at big markets, and a lot of my friends in the industry, and I'm starting to see why they're interested in secondary and tertiary markets, because the returns are there's a lot more risk there, but the returns can
Oh,
be out
yes.
of control. So I get that perspective, and I'm starting to see the light that way. But for me personally, I want to buy something for pennies on the dollar in a major market. Location, 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 right? So
Yep.
if I can, and I'm a heavy value add type guy, I want vacant pads, I want park owned homes, I want collections issues, I want infrastructure issues, because I want a headache that no one else wants to touch. I want to roll up my sleeves. I want to go and live on the property if need be, which I've done. So my first 14 months going full time, I lived every other week in our park at Atlanta, on a blow up mattress, away from my wife and my friends, and it was a struggle, but it was what I had to do to get full time. But it was 48% occupied, so we cranked it up to over 2/3 occupied, if you include RVs, to push to the refi, because we had to basically take a bridge loan out, so to speak, to get it done. So that's what I look for. I look for value add opportunities. Now, I do also, if there happens to be a good stable opportunity, I will make an offer, and I've done that before. And I have bought stable opportunities. But the thing is, if a stable opportunity hits market, it's oftentimes trading sub four
Yes.
cap.
It's already, yeah. So, and do you look for city water and sewer, or you don't care if it's
Um,
done well?
I don't really care. I actually had the most difficulty I have right now on one of my properties in terms of city, just utilities in general, is one that's on city sewer.
Oh,
So
really?
it's, yes, the point where I called the state's attorney general to complain and file a complaint,
No way.
and the person who answered the phone was like, "Oh, don't you mean such and such?" And I went, "Oh my gosh, I haven't even told you this person's name yet, and you know them by first name. So
That's
this
crazy.
person is getting litigated hard." So just because you don't own the lines doesn't mean it's not going to cost you an arm and a leg. And I actually, if you do your due diligence properly and you understand septics, leach fields, distribution boxes, and you understand the basics, and you have a good company in place, a good pump company, a good plumbing company in place, I, I actually, to a certain degree, prefer septic. Now, I haven't done well yet. I'm a little hesitant on wells, and I haven't done wastewater yet, but I've made plenty of offers on plenty of properties with both of those, so I'm open to it.
Got it. So now let's talk about some of your deals. Can you tell us about your best deal so far and the worst deal so far?
So I'll keep it in one area. So I own 142 pads in Spartanburg County, South Carolina,
Mm-hmm.
and it's a decent market. It's not Atlanta. I've owned in Atlanta. I own in Charlotte. So those are A markets. Spartanburg's more like a B market, arguably a C market. And so I like it. I don't love it. But I bought a property called Countryside Mobile Home Park, and it was a disaster. It's 68 lots, and there were 45 park-owned homes, 52 homes on the property, and collections issues at the wazoo. It was about 50% occupied, and it was on the market on and off for a while. And I talked to a bunch of people who now tell me, "Oh man, I had a chance to buy that and I didn't, and now I see what you've done with it." And I go, "Oh man, I could have done that." But the thing of it is, it was atrocious. So yeah, it was city water, city sewer, but that has its own issues. I've dumped thousands of dollars into fixing things. And I remember I had, for my first 3 deals, I had no trouble sleeping at night before I bought it. That was my 5th deal. Actually, sorry, my first 4 deals. So that was my 5th deal. And I remember having trouble sleeping before that because it was the biggest amount of money I put towards a deal. It was full recourse. And there were, I think, like 28 residents or something like that. I mean, it was not, there was no residents there. And it was at signing. We closed on February 15th. There were half residents hadn't paid yet. So having serious collections issues. And we brought our blow up mattresses. We slept on the property. We were there basically every day for the first 90 days and basically multiple, I mean, we were there multiple times a week at a minimum for the first 6 months. And long story short, we've now brought in 11 homes. So we're at 63 homes there. We want to bring in one more and then basically call it. Collections issues are all but fixed. We've figured out marketing. We taught ourselves Spanish so we could market to Hispanics as well.
Wow.
We put our heart and soul into that property, and we have some of the most amazing tenants. So I mentioned earlier, we have a partial college scholarship. Our first recipient was in Countryside. So for a lot of reasons, I'm really proud of the risk that I took on that property because no one wanted it. And I'm proud of the risk that we took, and I'm proud of the effort that we put into it. And now we have I think 2 vacant homes, so we have 61 residents. Pretty soon we'll have all 63 homes filled. We'll bring in one more, have 64. To start off with about give or take 28 residents and basically double that, stabilize the property. We've already refinanced the property, and it is a better property because I know the assistant to the district attorney. I went to college with her, and I know the people in the narcotics department, and the local law enforcement. I talk to them every now and again, and they're like, "We don't get calls out to Countryside anymore."
That's great.
And it's all because I got bad people out and brought good people in.
That's the key. So this was awesome. Thank you so much. How can my listeners reach out to you?
Yeah, so please do. So Ryan Narus, my name. It's Narusn like Nancy. You could just Google me. I think I'm the only Ryan Narus in the United States of America. Very easy to find. Connect with me on LinkedIn. Check out my website. I've got tons of free content, mobile home park related and just real estate related. If I can ever help you, I don't care if you are a janitor or a CEO of a major company or anywhere in between. I want to help you, and I don't expect anything in return. I genuinely speaking love helping people. So please reach out to me. I will make time for you. I will answer your questions. I love connecting with folks. If I can help you in any way, shape, or form, I love it. So please do reach out to me.
This was great. I enjoyed this episode thoroughly. Thank you, Ryan.
I had a blast. And like I said, I'm honored because you had some awesome other folks that you interviewed. So I'm glad to be with a star-studded cast.
I appreciate it, Ryan. Have a nice day.